Hello friends, today I am discussing about value investing, a time-tested method for making big buck. There are many strategies, but value investing is the best strategy which have been followed all over the world. I'll quickly take you through the basics, then I'll take an example and show you how to really do this without getting into the different techniques which are there in the area of value investing. So basically, stock, when you invest in equity, basically you are buying a stock or equity or shares, whatever you may call it. So that gives you a stake in the company, very little stake, proportionate to total number of shares which have been issued by the company. And since you buy that, it brings a reward and risk along with it. So if you invest in a good company, good management, progressing one, you will do very well in your investment. To the contrary, if you do in a bad company, your investment will go down the drain. And returns comes into different way. Dividend and capital appreciation. So dividend is, let us say in a year, you get 10 rupees dividend, so that comes to you every year. And capital appreciation is change in the price. So here, when you look at, let's say price on 1st April was 100 rupees, and price after 1 year on 31st March becomes 125 rupees, then appreciation is 25 rupees. That's the concept of appreciation. It is very important to understand what is value and what is the price. They are not the same. Price is the marked price and value at the price which you buy. So let us say in a sale you buy a Raymond shirt at 500 rupees, whereas the price of the shirt is 2000 rupees. This means you are buying that at a great value. Similarly, if you buy stock at great value, it will do wonders in your investment journey. Here, with help of a graph, I have tried showing the concept of value. So the line over here is the intrinsic value. Let us not get into detail how this is calculated. There are many techniques which we'll talk in details in subsequent lectures. But here, let us assume that this is the value. And price sometimes is lower than value and sometimes it is higher. Why it happens? This happens primarily due to supply and demand situation and euphoria in the market. When the demand is more, price keeps on going on. And therefore, at a time, you get a price which is much higher than the value. And to the contrary, sometimes when the demand is low, the price becomes lower. So for a value investor, this is the point where he should buy the stock. Friends, I have showed you what is value investment. Now with the help of an example, I am going to show to you how to find value stocks without getting into different techniques which are there in the area of value investing. So let us move forward. I'll pick up a company known as Manali Petrochemicals. Now look here, this is a small cap company and with a PE of just 4.7, ROC is 63%, ROE 47.1%, debt equity is almost zero, PEG ratio is closer to zero, so very good stock for investing. Promoter holding is 45%, sales in 5 years has grown at the compound rate of 20% and profit in 5 years have grown at the rate of 54-55%. So is the case with 33 years. This company has a free cash flow of 633 in 5 years and 585 in 3 years. So from the selection criteria, this is a fantastic company to invest. Now the question comes, is it overvalued or undervalued at this point in time? So here for finding that, let's get to P ratio. And as you see here, the 5-year median for P ratio is 7.3, whereas the stock is available at about 5. Fantastic opportunity. When you look at the 3 years P ratio, again this is undervalued. Median is here, it is almost half or less than that to the median. On 1 year basis, again this is little undervalued. Now let's take another criteria, price to book. So on this criteria for 5 years, this is just at value. But when you look at 3 years, it is little undervalued and at 1 year, it is much undervalued. So friends, that tells me that this stock is undervalued and very good buy at this price. So friends, what I have discussed is what is value, what is price and how you can find whether a stock is undervalued or overvalued. So if a stock is undervalued, it has chance of very little risk and it will give you fantastic return. I am going to create a detailed video on this, so watch out for that space, and eventually I am going to also create a set of videos which will be educative in nature, and I think you being an investor, it will be very good for you. Thank you so much for your attention and stay engaged.